And now to our economic experts, who in January took the plunge and made some bold predictions about where they saw the economy heading in 2011. As we're approaching the halfway mark for the year, we're checking back in with them to see how their predictions are faring. Tonight, interest rates.
The challenge with the cash rate this year has always been trying to offset the RBA's very hawkish commentary against what has been a softening non-mining economy. Now, we said 5.25% at the beginning of the year, thinking that there might be some downside risk if the forecast was going to go in either direction, and I'll be probably pulling that back by at least one tightening, so maybe 5% by the end of this year. The RBA seems very determined to get at least one rate rise in, and that will probably be the case, but the challenge is always going to be able to do that against a softening non-mining economy.
We've had a slowdown in the economy at the start of the year caused by unforeseeable events in terms of climate and geological events, and that's just procrastinated the recovery phase, but it has not stopped it in any way. If we look at what Glenn Stevens from the Reserve Bank is saying, he has indicated that interest rates will go higher. What's not certain is when they'll go higher, but I believe that there'll be enough momentum in the economy and in inflation rates by the end of this year to see the pressure on the bank again, and we'll have at least a couple more rate rises. So probably 5.25% is a reasonable bet.
I'm still very happy with that forecast. The March quarter inflation report showed that we're clearly past the trough in the inflation cycle, and that inflation is going to be rising towards the end of this year. And so it all really swings, I think, on the June quarter result, whether how high that is, whether it's above the RBA's expectations. But at the moment, given that inflation clearly is rising and the economy will be strengthening towards the end of this year, I tend to be very confident that that forecast is still on track.
Our core view now is that there is more likely to be one tightening rather than the two. Underlying inflation is still expected to pick up and move towards the top part of the band at the end of this year, and economic activity will also accelerate as we move through this year. However, downside risks from the global economy have increased, and the domestic economy is going through a bit of a soft patch at the moment, so that makes it more likely that we might see one tightening rather than two.
The domestic picture has been a little bit more rough than I expected. The Queensland floods and such events make interpreting the direction of the economy in the first half difficult, but the investment boom in mining is still there, it's still coming through, and at some point it's going to push the economy, the broad indicators for the economy, firmly back into the positive. So I still think the rate rises are there, but the timeline may well have been pushed out.